It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is Esther Gulius, the tax lady, and this is our hour to talk about taxes and letters and filing late and penalties and what the state is doing and what the federal's doing and stuff, and time to give you some tips so that you don't overpay next year. Anything tax-related, financial-related is on the table. Our phone number is 803-0930. 803-0930, star 930 on a cell phone, and I'm joined in studio with Tiffany Fabian.
Hey there, Esther. How goes it?
Isn't it wonderful? I love Western New York summers.
Oh, it's beautiful.
It
I really, when I was walking into the studio, I paused and I was like, I would just like to stay out here in the sun. It's just gorgeous.
It is wonderful. Well, you can have the windows. You can pretend.
Yeah.
And Christopher Fabian. Hey, Chris. How you doing?
Hello, Esther.
Hello, Christopher. So what's happening at the office that people should know about? I understand that a lot of the love letters are coming in, and that means that people that are listening are getting love letters. I had somebody the other day when I was in the office that said that they had just gotten a call from the Internal Revenue Service that they owe money. And I said, oh, it's a scam. And they said, no, they did. It was the agent's number. And I said, they made it up. You know, so it's just, they're still doing it, but less.
Yes. One of the letters that I want to point out is one of my clients, actually somebody else's client at the office, received that they didn't report one of their distributions from their IRA, and so they had to. But the thing was, it was from a Roth IRA, and so her basis was such that I did an 8606 and none was taxable.
Right.
And so you just want to pay attention to those things.
Many of the letters, if not most of the letters,
Right.
are the bill that they send you is to get your attention, and if you pay what's on that bill, in most situations you're going to overpay, if not all, some of it.
Right. Another IRS one, I know Chris is going to talk about the New York ones, is stock sales. A lot of people neglecting to put 1099B transactions on their return. I did a couple this week for gambling winnings. For instance, she put some of her gambling winnings,
But not all of them.
And the IRS called her to it. But the thing was, with this lady, her losses were so much that it was a zero. So she
That's
was
great.
very happy.
Chris, you've had several situations where you called the state, and once you got a hold of them or the federal government, the problem was solved over the phone, right?
Right. A lot of them you can just solve over the phone. I had somebody from that we amended a New York return, and there was daycare and the Empire Child Credit, and New York State backed them off or gave them $100 of the child credit and backed off the whole child care. First person we talked to said, oh, well, that's because you claimed too much. It's limited to $3,000. And I said, we only claimed $1,840. Oh, you need to talk to Protest. And I got to say, once we talked to the right person, within 3 minutes, they said, yep, you don't owe us, we owe you, and we're going to send you the check within 14 days.
Okay, so now if you've gotten a letter and you're going to pay it, you really ought to give EG Tax a call. We charge a lot of money to help you with this, right? How much?
Zippo.
Nothing.
Nada.
So, I mean, this is just part of what we do as an outreach to the public, and EG Tax wants to help. By the way, we did a Social Security seminar the other day with Mike Hayflick from the Financial Guys, and that's going to kind of be our subject today. We want to talk about Social Security. Should you take it? How much is taxable? Do you have to work? Why do you have to pay it back? And all that kind of stuff. So if you have any Social Security questions, you can join us too, 803-0930, 803-0930, star 930 on a cell phone. And we're going to go to the phones, and we have Marilyn. Hey, Marilyn, how can we help you, my dear?
Hi, Esther. I just called to say how nice Karen is that works for you.
She's a wonderful lady, yep.
Letters from my IRS that said that I owed them money, and I didn't. It turns out that they really owe me money, and I send it within 30 days.
Yay! Well, that worked out.
It was a relief to be able to go in. She said if I left right away, she would take me before her 1 o'clock appointment, so I didn't. I left there 20 to 1, so she didn't keep anybody waiting, and she was very nice to me.
Oh, that's great. And you got good news.
Yes, I did.
And Marilyn, you're a prime example of what we say, don't just pay it, have somebody else look
But
at
the
it.
inclination when they send you that, it's a bill. So, your inclination as a good, honest taxpayer is to pay because they even include an envelope, right?
Yeah.
But those bills that they send you are just their best objective look at your situation based upon what they have. They don't know all the facts, and that's part of why we have a voluntary income tax system. So I'm glad we were able to help, and thank you for the call, Marilyn.
Oh, you're welcome.
Thank you, dear.
That's
Bye-bye.
good news.
That is good news.
Yeah, and another thing I want to say, a lot of times when you get these letters, you have to also look at the state filings too, because there's freedom of information, and so the federal is going to communicate it to the state agencies, and so make sure you pay attention to
Right,
that.
that's true, but not if there is no federal bill, though.
Correct.
Right? If when you find they might send you that bill, then we fix it and we find out that there is no bill, and then as long as it was never paid. Okay, let's talk about Social Security. And again, if anybody wants to be with a Social Security expert, Mike Hayflick is a Social Security expert at the Financial Guys, and their phone number is 633-1515. We are the tax experts, and so we know a whole lot about Social Security taxability, what makes it taxable, who can collect, things you should think about. First of all, people don't know when they can start collecting. When can people start collecting Social Security, Chris?
Right now, age 62.
Right. And now if you're under normal retirement age, which would be for people now in this situation that were born prior to 1960, normal retirement age is 66, right?
Right.
Yep.
Right? So if you're under normal retirement age and you start collecting at 62, they're going to restrict the amount of wages you can earn, or else they're going to make you take and forfeit $1 for every $2 over your wages. Now, your wages are limited to $15,720. So if you're age 62 and your wages are under $15,720 or self-employment, you can start collecting and drawing on your Social Security.
That's right.
Right?
Yep.
And you're going to take a 25% at 62, a 25% hit on the amount that you could have gotten had you waited till age 66 at normal retirement age. So you would get. So if you start collecting now, it would be 62, 63, 64, 65, and then at 66 you could start collecting your normal, which would be 25% more. But what people don't realize is if they are making, let's say they're working a part-time job, what they don't realize is if they do start collecting and they get that 25% reduction, they think that's bad. But the truth is, if you look at somebody who at normal retirement age should collect $2,000, that means now they'd collect $1,500, and so that means that they would get $18,000 in a year. Over that 6-year period, that means that they would get $90,000.
Yeah.
Right?
A lot of times you look at it and you say, how many years will it take to recoup the loss?
That's exactly right. So they would get $90,000 during that 6-year period. To get an extra $6,000 a year for the rest of their life. And in other words, it takes 15 years past the age of 66 to break out even, which means you break out even at 81.
Now, if that same person was working and making
Then
over
it's
$15,720, then it's a horse of a different color.
Horse of a different color.
Yep,
right?
yep.
Now, if somebody's making $15,720 and they're collecting $18,000 in Social Security, and they're married filing a joint return, is any of it going to be taxable?
No. Well, depending on what the spouse's income.
Right.
If the spouse has no income, then none of it would be taxable.
Right. So you aren't going to pay any taxes on Social Security. You're not going to pay any taxes on your wages. And this keeps even getting more in your favor as you approach normal age 65 from the tax perspective. So I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. If you have any questions regarding Social Security, tax issues, if you owe money, haven't filed, getting love letters, give us a call. We'd love to talk to you. We're going to take a short break, and we'll be back with your calls on the other side.
Listen, babe.
hide from the IRS.
That's right. I'm Esther Goulias, the tax lady from EG Tax, and we're kind of talking today about Social Security. People don't know when it's taxable, how you collect, why you pay it back, and we want to unscramble the spaghetti if we can today. 8030930, 8030930, star 930 on the cell phone. I got Chris Fabian and Tiffany Fabian in studio with me. Okay, so Chris, what have you heard people say when they're delaying their Social Security?
Because I'm going to get 8% more a year if I keep waiting. So that return on investment, I can't touch that at a bank.
Well, and
that's true. But the thing is, unlike your investment that's sitting out there, that's a guarantee. That's your money.
Right.
If you die, your beneficiaries get that money.
I mean, the bottom line here is if you lose it, if you don't use it, you lose it with Social Security. So we all don't know when the Grim Reaper is going to come, and so you have to understand that it is if you take it at 62 because you have the wages are low enough. By the way, what if I'm making $1 million in my investments? Can I still collect Social Security?
You can still collect Social Security, nothing paid back.
Right. This is strictly wages and self-employment income. That is that $15,720, right? Now,
correct.
If you are making $1 million, you're going to pay 85% on the amount of money Social Security you get, right? But you won't be paying anything back. So, and a lot of people think, well, what I'm going to do is let my Social Security sit there because I'm going to get that whole 25% extra at age 66, and I'm going to take money out of my IRA to augment it.
Right.
How does that all work?
Okay, so if you're going to take money to substitute your IRA, well, then you could be making income taxable on your tax return.
Exactly right.
So then you know.
So you're saving the money on the Social Security, right?
Yep.
But really, it's going to take the 81 to get back, and you're taking money out of the IRA, which is yours.
Yep.
Yes.
And so you're depleting your money that can go to your heirs, or you can live on yourself.
Right.
Okay.
So what you think you're saving, you're actually spending, and
and again, all of these situations, we've kind of got cookie cutter situations here. But if you have a situation where you have a New York State pension and you're getting $75,000 a year in Social Security, or maybe you're making $150,000 working and you want to work till age 66, then that's when you would wait for normal retirement.
Perhaps,
age, right?
Yep.
Right?
That's
well, you
right.
would because you'd have to pay it back if you're making $100,000.
Right.
Unless you want to quit.
Right.
All right, we're going to go to the phones and we're going to talk to Pablo. Hey, Paul, this is Esther. How can I help you?
Yeah, Esther. If one is age 66 and collecting full retirement,
right,
and working full time, let's say that that person then retires in 2 years. Do they have to notify Social Security, and then would there be an adjustment made because for 2 years they were continuing to pay into it?
No. So are you suspending your Social Security? Are you suspending your collection?
I am not.
All right. So you're continuing to collect.
He wants to know because there's going to be an increase because he's been working. Does he have to notify Social Security? And I think the answer is no, right?
No, you don't. But the bottom line is you're still collecting your Social Security, right?
That's correct.
Yeah. So that is something Social Security will do automatically.
And that question is asked often.
Right. But again, if you want to talk about, like, for instance, suspending your Social Security till age 70, there is those options had you just started taking it if you wanted to wait. But again, that money you don't take, it takes about 15 years to get it once you do start for all the money you've lost. So, but again, if you need any questions answered specific to your situation, I'd suggest you call Social Security, but you're going to find out that they have all the information.
Okay, thank you.
Okay,
Sure.
Thank you, Paul. Good question. I'm Esther Goulias, the tax lady, Pablo, from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we have Donna from Cheektowaga. Hey, Donna, how can we help you?
Hi, how are you?
Good.
I'm a widow, and I'll be 60 in August. I have a meeting with Social Security on Monday, but I was wondering how much can I make before I have to start paying back?
Okay, so are you collecting the widow's pension? How old was your husband?
He was 51.
All right. So so she still won't be entitled. She'll be entitled to collect
the widow's right,
but
right. But with the working would still be the same limit of 15,000.
15,702. 720. Forgive me. 15,720. Does that answer your question, Donna?
Yes, it does, because I do make probably a little less than that.
Okay. Well, then you see, what's great is you're going to get your Social Security. Now, when did your husband pass?
About 10 years ago.
Oh.
He was 51.
Oh, okay. So when he passed away, he was 51.
When he passed away, he was 51.
Yeah. I'm sorry to hear that. So so now you'll get your wages and your Social Security. And do you have children still in your home?
No.
Okay.
And-
So you'll be a single taxpayer.
and the nice thing-
So some of it will be taxable.
Right. So you want to plan on that, Donna, to find out how much of it will be Social Security. So usually what we have people do is when they're going to collect Social Security, they'll call us and we'll run the numbers to let them know how much extra it's going to cost you at the end of the year. But don't forget, none of it is taxable in the state of New York.
And the other thing is, Donna, are you putting money into your IRA or pension plan at work?
Yes.
You are. Okay,
You might wanna increase
because you
that.
might want to increase it since you're going to have this extra money coming in. Kind of it'll feel like a
Augment.
windfall sort of, and you'll be maybe be able to put more money into your 401k plan or maximize your IRA as well. And so even though you have the money coming in, you'll be able to
Adjust it.
put it into your IRA and build up that as well.
And that's tax-free then.
And then it would make it tax-free. So it gives you an opportunity to kind of play with the numbers and make it work out for you.
He didn't work very long, so I'm not expecting I'm going to get that much. But what I was going to say is...
Well, when you talk to them on Monday and you find out how much you're going to get, give us a call and we'll run the numbers for you so that you have something else to put into your thinking cap.
Okay, thank you very much.
You're welcome, Donna. And that's the whole thing is it's all running the numbers.
Yep. But you raise a good point.
Every situation is different. And I'll tell you, sometimes people say to me, well, I really don't need the money. See, the thing is, if you don't take it, they're not going to give it to you later.
Right.
It's not like you're stockpiling it and they're going to say to you, oh, gee, you have $20,000 that you didn't take.
But
when would you like
The
it?
thing about not needing the money is you might not need the money, but you could do things like you suggested, increase what you're going to put into your 401k or increase it and things like that.
Well, and for me, a lot of it has to do with leaving my heirs a nest egg.
Right.
You know? I mean, I want to be able to bless my family. So I want to be wise. I don't want to just leave it. I just don't want to leave it at Social Security, you know.
Yeah, and then of course when she goes to retire, she can switch it from his Social Security to hers.
Right.
And so that's something to keep in mind.
I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Phil in Pendleton. Hey, Phil, how can we help you?
I filed my taxes in April.
Okay.
And I owe tax money.
Okay.
And they told me that I would get, and I didn't have the money to pay it at the time. And they told me that they would contact me and they would set up a payment arrangement.
Uh-huh.
But I've heard nothing from the IRS.
Okay.
From state or federal.
Okay. But now, so do you have the money to pay it off, Phil?
I don't right now, but I mean, I'm putting it aside. I'll probably have it in another month or two.
Okay, so
Installment. He should do an installment agreement.
You don't want to wait for them to contact you
Right.
because what they're doing is they're charging you penalty and interest, failure to pay and interest on the whole thing. So what you want to do is be proactive and call them. And moreover, quite frankly, you can just call us and we'll give you a voucher to send in and just get as much paid as possible so that when they finally do contact you, the penalty will be much lower. If you wait for them, you're really just shooting yourself in the foot.
Yeah, Phil, if you call our office, I'll set up an installment agreement with you over the phone. It's a form, and you mail it in, and an installment agreement would be a great opportunity for you. And so we just...
Well, but why would he do that if he doesn't need to?
He said he didn't...
He's going to pay it off in 2 months.
Yeah.
Oh, he said 2 months? I missed
they're
that.
going to charge him, what,
$50.
$150.
$50 if it's by right direct out of your checking account.
Yeah,
$50.
but the bottom line is why do
Phil,
that?
did
if
you
don't
say
need
you
to?
could pay it off in 2 months?
Yeah, I could pay it off in a couple
Yeah,
months. Yeah.
I wouldn't set up the installment. I don't mean to. What Tiff has to say is correct, but in your situation, you don't really have a long-term installment problem. I would suggest you just pay off as much as you can now. Then they're going to bill you again.
And another thing that I've discovered, if you owe money and you call the IRS, they answer really quickly. If you click on the option that says you have a balance due, they answer really quickly. So you could call our office, or you could also call 1-800-829-1040. I've discovered when you...
Say that slower.
1-800-829-1040.
829 is tax, 1040. And this way, Phil, you know, they answer the phone quickly because anyone with money, when they owes them money, they really want to come up with they want to come up with a way to get it paid for. So that's what I'd suggest you do, is that pay as much as you can now. Give them a call. They're going to send you another bill. And by the time they get to the bill to you, boom, you'll be able to pay it off, and you won't have to pay the installment agreement.
Okay, and that will be both on federal and state.
Absolutely.
Well, the phone number to state is 518-457-5181.
Okay.
Okay?
All right.
Thanks, Mr. Phil.
Oh.
Bye-bye. Have a great day. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. If you're somebody that's thinking of collecting Social Security, have started to collect, wonder how much your Social Security is going to be taxable at the end of the year, wonder how they even come up with these formulas. We have the formula, and we'll be very happy to share it to you so that you can sit at home and figure out just how much of your Social Security is going to be taxable. Wondering if you should wait till 70 to collect. We're going to talk about all those issues on the other side of the news. Chris, anything from Social Security? We can talk about Social Security disability if you're a low-income person and getting SSI, all those kind of things that are important to you. And since Social Security makes up so much of so many people's retirement income, that's something you want to know something about. And I will tell you, Social Security gives you a lot of information if you call them.
They do. You know, they like everything now over the phone. They would like appointments, but they're limiting the offices. Like they shut down the office in Amherst a little while ago. So now it's West Seneca, Niagara Falls, and downtown Buffalo. So, you know, if you want to do face-to-face, call, make an appointment there. They really don't like walk-ins, unfortunately. Almost like the IRS, who won't take walk-ins anymore down on Elmwood.
That's right.
So.
I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. We're going to break for news. We'll see you on the other side.
There's that relaxing music.
We're going to make things easier for you, too. I'm Esther Golias from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. We're talking about Social Security as our main topic on today's show. But anything tax-related, financial-related, you can give us a call, 803-0930, 803-0930, star 930 on a cell phone. All right, a lot of people know, Chris, that they can start collecting Social Security at normal retirement age if they're still working.
Age
right?
66.
Right. But in the year you turn 66, there's kind of a caveat to that.
Right. They let you earn a little bit more, but not as much as you want. They let you earn $41,880.
So in the year you're turning 66, you can earn $41,880 and start your collection at that point in time. Right?
Right. So, I mean, that's still, you're okay, I'm going to retire halfway through the year. So that gives you a little bit of a leeway to still work for part of the year when you turn 66.
That's exactly right. And for those people that don't collect because they continue to work until age 66, how much can they make and still collect Social Security?
When they turn
once they're normal retirement.
Once they hit 66, then it's anything. You can make as much as you want.
That's exactly right. So those of you that are saying, "Gee, do I have to quit?" Because I know that there's that $15,720 figure. Once you hit normal retirement age, there is no limit as to how much you can make.
Right.
So you can make in wages and self-employment income.
Right, and a lot of people are afraid to take it because they don't want to pay taxes. And like the caller earlier, you were talking about a pension plan. If you're still working, even if you're over 70 and a half, you can still contribute to your pension plan and don't have to take it out. So if you're getting that Social Security, load up that pension plan, bring that income down, so then your income level stays the same.
That's exactly right.
So you're putting the ball back in your court and you're winning.
That's exactly right. And the other thing is, if you want to sit down and find out how much, if you just started collecting or Social Security, if you want to find out how much of your Social Security is going to be taxable, you can stop in at EG Tax or give us a call, set up an appointment. There's no charge. We'll be very happy to do a consultation so that you're not blindsided when you find out that you might owe 85% on your Social Security. Not 85% of it's
you're not paying tax
at
an
85% could be taxable.
Correct.
Let's go back to the phones again. 8030930, 8030930, star 930 on a cell phone, and we have Betty. Hey, Betty, how can we help you?
Hello.
Hi, Betty. How can we help you?
Yes, I want to thank you, Esther.
What's that?
Listen to your show every week, and thanks to you, I wasn't taken back when this gentleman called and said he was from the IRS.
I bet he had an accent, too.
Now, to start with, the IRS would not call me from Irvine, California.
That's right.
That's right. I mean, that's correct. I bet you he had a heavy accent, did he not?
Yes.
Yes.
I could barely understand him. He spoke such poor English.
Right.
He claimed that I owed the IRS $1,000.
Mm-hmm.
They wanted it within 24
Or
hours.
they were going to come and arrest you.
Right.
Address on where to send it.
Yep. Boy, isn't that something? Well, good for you, Betty, that you were able to stand up and, did you just hang up on him?
I hung up.
Good for you. Good for you. And for anybody else that's listening,
okay,
the IRS doesn't call you and make demands
He tried it again. This time, I interrupted him and told him, if you call my number again, I'm giving all this information to the police.
Good for you.
Never called back.
Good for you. Good for you.
Thank you.
And they didn't arrest you, right, Betty?
I might have fallen for that if it wasn't for your show.
Oh, you're so sweet. Thank you, Betty.
Warn the people again.
All right, Betty. Thank you.
Thank you.
Bye-bye. And so
she's right.
I'm going to take Betty's
advice
lead here. If somebody calls and they say that they're from the Internal Revenue Service and they give you some bogus agent number and they're demanding a payment, or else they're going to come arrest you, they're going to arrest your husband at work, it's a scam. Now, they have been arresting people, have they not, Chris?
Well, the IRS will arrest people.
But I mean, haven't they done a number of arrests?
Oh, yes. In Florida, actually, they got 5 people who were refugees from Cuba, and they had, they were responsible for $10 million collected in fraud.
What you mean is they've been arresting people who have been making these fraudulent calls.
Right. Oh, yeah. They didn't arrest
at first, I thought you meant...
That's,
No. They've been arresting the perpetrators.
That's great.
Which
That's great.
I'm so happy about. Because I noticed that a lot less people have been called lately.
Yeah.
Because, it goes through their network. They know.
And what Betty says is true is Chris and I have seen people who have given these people money and then it's too late. There's nothing you can do. So Betty's right by making sure you know.
For Betty. All right. Hey, let's go back to our Social Security situation here. Now, when is Social Security taxable?
When you or your spouse, if you're married, you take all of your income, then half of your Social Security, you add that figure up, whatever that figure is, then you subtract $12,000 and you take that answer and you divide it by 2. Is it 12 or is it right?
It's 32.
It's
32. If you're married,
it's 32,000.
It's 32,000, and then you take that answer and you divide it by 2.
And if there's an excess, then half of that is taxable.
Right.
So,
sounds so easy.
If you had a $20,000 pension,
right,
and you had $40,000 married filing joint return and Social Security divided by 2, another 20 of the Social Security go into the computation.
Right.
So the $20,000 in Social Security, because that's half, plus your $20,000 pension puts you at 40.
Yep.
You subtract that from their arbitrary floor married joint of $32,000. So the excess would be $8,000.
So
you divide that by 2. So what would be taxable would be $4,000. The $4,000 would then be added to your pension. So on $24,000 would be your adjusted gross income. From that, you take your standard deduction and personal exemptions, and if they're both over 65, it's
so
around 22.
Right,
Yeah.
right. So
And-
they got
$2,000 taxable.
Yeah.
At 10%, they'll pay $200 in income
And
tax.
this is why we always warn seniors about gambling, because that adds to that computation. And so then more of your Social Security is going to become taxable. So.
That's true, and that's what's so weird is that your Social Security, you're not going to get any more Social Security, but when you gamble, it all goes into that computation.
So if they would have won $1,000, they're paying tax on the $1,000 gambling plus an extra $1,000 for potentially $1,000 more in Social Security. So they're paying tax on $2,000 even though they only got
Right.
$1,000
And
extra.
so when you're talking to taxpayers, you say, now watch this. You didn't get any more Social Security, just more of it is taxable. So that's really important. And so especially people that are working, that like we were talking about before, a way that you can make your Social Security less taxable if you are paying taxes on it is to use the IRA as a way to shelter some of the taxability.
Right, definitely. Save you a lot of money.
Absolutely.
And it could also, potentially, depending on your income, give you a retirement savings credit, too, for still putting money away.
Yeah,
So-
but
That's exactly
but it's so
right.
funny. There's somebody that I was at the office this week, and they got a letter. The one I was talking about at the top of the show, who got the letter, didn't declare all of her gambling winnings, and so in the letter it says, you owe more on your Social Security. But then I went and backed away. It's still she owed nothing because wrote off her losses on the Schedule A. Shows she was okay. So you really want to pay attention to these things.
Right, and so many people know that if they have gambling income, that they can itemize and take the gambling as an itemized deduction. But that isn't necessarily true, right?
Right. Well, first of all, the gambling losses do go on a Schedule A. You can't just say, I won $4,000,
Right.
lost $2,000, so I'm only going to put $2,000 on line 21. That doesn't work
Right.
like that. You got to show the full $4,000 and then the $2,000 on your itemized deductions if you
can
itemize.
itemize. So I've had people say to me, okay, so this means that I'm really getting hammered because I'm not getting anything for my gambling losses. Yes,
Correct.
you are. And it's so sad because it affects many times the people that can afford it the least, the people that are on a fixed income.
Yep.
So that's why we kind of all hammer on the gambling, because that's something that you think you're doing for fun that can cost you a lot of money in taxes at the end of the year.
That's absolutely correct.
And very few people end up ahead.
You mean gambling?
Gambling.
That's for absolutely sure.
It's a moneymaker.
All right. You know, the other thing is if you're somebody that, like I said, we were talking about Social Security, is on SSI or SSD, a lot of times they think that's not taxable. But that is not true. Social Security disability uses the same computation as regular Social Security.
That's right.
Yep.
That's right. That
So-
one that we were talking about earlier. So
you may be 30 years old, got hurt at work, and you're on Social Security disability. Your wife's making $50,000 at her job. Your Social Security is going to be taxable.
That's exactly right. And again, the other thing is if your Social Security is taxable, a way to counterbalance that is to have them withhold at source, right?
Correct.
How much can they have withheld?
7, 10, 15, or 25.
25.
And to do that, how do you do it?
A
You fill it-
W4V.
V, yep, voluntary form.
Right. So how do you get that?
You can go right online. We can print it up for you if you can't, and then you turn it right into Social Security.
Okay.
And if if your situation ever changes, you can hand it a new form to change it or to get rid of any withholdings.
Okay. I'm Esther Goulias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. We're going to take a short break. We'll be back on the other side with your questions. Now, who is that? Kool and the Gang? No. Oh, well, I'm always
Did
so
Tyler
good.
call
Am I
that
good
one
at
in?
this? Am I I good or what? I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 cell phone. I know when I wanted to make sure I mentioned this. Happy Father's Day to all the dads. You know, I wish I could hug my dad one more time. He was a wonderful, wonderful man. I will tell you, I miss him a lot. But tomorrow, tomorrow we have a big party at one of my kids' house, one of our daughter's house, and we're all going to be there, and they're all going to say happy birthday and happy Father's Day to their dad, who's my husband, and I wish him a happy Father's Day. And happy Father's Day to you, Chris.
Thank you.
You are one of the best dads I've ever seen.
I just told him yesterday, if Gracie gets a scholarship for soccer, the credit is all his.
No, but I mean, he's just the best dad.
He is.
He really is. I mean, he just is a great dad. He's got girls, and he's just there with them all the time, helping them with soccer and soccer and things.
Traveling and getting them. And over the weekend we had to get over the week we had to get an apartment for Rebecca for where she's going, Chicago. And it's just, he's always involved, always present.
All right, let's go back to the phones. And Dave from Buffalo. Hey, Dave, how can we help you?
Hi, Esther.
Hi.
Esther, let me ask you a question. My wife's ex-husband applied for his Social Security online. Now, he says he gets full Social Security at 66, but I differed with him, and I said, you know, you get the full Social Security is supposed to be at 67. But he corrected me and said, no, it's based upon when you were born.
That's right.
That's
so
true.
Was he born before 1960?
Yes, he was.
All right, then it's 66.
Esther?
Yeah, then it's 66.
He was correct.
He was correct.
Okay, all right. The other question I have here, and it's a three-part question. That was one.
Okay.
The second part, he said, because of the fact that even though he's been divorced from my wife for over 20 years, when he was applying for Social Security, he's a pretty conscientious guy, and you know, and whatever situation may be, that he. One of the questionnaires, you said, do you want your wife or your ex-wife to receive 50, part of half of your Social Security? And he marked yes. Now I said, how could that be? Because you have to be divorced. He said that's not the case because he had called. He said no, that's not the case. He goes, she still would be entitled to have his Social Security
as long as she was married to him for
10
years or more.
Really?
Yep.
Okay, that's great.
Right.
For 20 years. Okay.
And it doesn't affect the payout of his Social Security, so it's nothing that affects it. It's just the law.
Yeah, she
but again, if you want to talk right to the horse's mouth, call Social Security directly or call Mike Hayflick at the Financial Guys, and he'll give you all the nuances in the Social Security law.
That was the last part of my question. I won't take up too much more of your time.
No problem.
I'm a pretty good earner. I make a good dollar. Because of the fact my wife would get half the Social Security, let's say he's going to be making $1,800 a month, so she'd get $900. Okay. Because of my earnings, would that be taxable?
Yes. Mm-hmm. You would pay, assuming you said you're a pretty substantial earner. If you make more than $44,000, including half of your Social Security, you're going to pay at 85%.
85%?
Right, 85% of the amount she collects.
People get confused.
So let's just say, that she collects $10,000. All right, so $8,500 of it would be taxable.
Counts as income on the tax return.
And if you're in the 25% bracket, that means that she will pay taxes of about $2,100 on that money.
I mean, I would be paying taxes.
Yeah, but wait a minute. See, Dave, wait, hang on. If you get $10,000 and you only have to pay $2,100 for it, you still made $7,900, right?
It's far better to get the money than worry about the taxes.
Get the money.
I'm not going to get that money. Believe me.
But she could.
No. Then give it to me. I'll pay the taxes.
Believe me. If I could get it from her, believe me, I'd
have it. You're saying your wife won't share it.
But she could also.
Question here. Because of the fact that so we pay out this money, 85% is taxable in whatever tax bracket I'm in. The final question is, That's it. I have to find. I was so traumatized by that statement there. Esther, have yourself a great Father's Day, and I wish you great memories for your dad.
Thank you, Dave.
You
You
too.
know,
Happy
I mean,
Father's Day.
one
Thank you.
thing that Dave's wife could do, if she's under age 65, and she can put the money in an IRA
That's exactly
and then
right.
reduce the
That's
income.
exactly right.
Right.
So
That's right. So that would mean that it would cost Dave
less
nothing.
money. Yeah.
Right.
Right?
You know,
Right.
I mean, and if
Most
he
of
doesn't
it,
want to
right.
pay tax on her Social Security, I don't want to sound like a jerk now,
Right.
but he could file married filing separate and
That's true.
see what happens to his tax
That's
rate.
true. That's
Right.
exactly right.
Right. But if they live together,
Right, but
be a
still, he
5%
would
tax
pay
rate.
a lot more in
Right.
Yeah,
taxes
yeah.
by filing married filing separate
That's
Yeah.
than
true.
married
That's
joint.
True. Good comments. All right, let's go to the phones and we talk to Pat in Buffalo. Hey, Pat.
Hello, Esther. How you doing?
I can't complain. Happy Father's Day.
Well, thank you. I have a question about the widow's benefit. I'm entitled to that, and my question is when they look at that $15,000 threshold, because I'm presently still working, do they go by gross numbers or do they go by adjusted gross income?
Okay, what 15,000?
the 15,720 if you haven't reached
Oh,
full.
I gotcha. Oh, you mean your wages, right?
Right.
That is your wages, period. So it's your wages or self-employment income. That's the threshold.
Not
So
adjusted.
in other words, Pat, you could make $40,000 in the market. You can have capital gains of $100,000, wages of $10,000, and your wages are under $15,720. So you're good to go.
Okay, but the question is I make more than $15,000 working.
All right, and you're under the age of 66.
Yes.
Then the threshold's 15,720, except for the year that you're going to turn 66, and then it goes up to the $44,000 figure.
So that means you'd
48,000.
have to, anything over that 15,720, you'd have to pay $1 for every $2 that you're over.
Right, they would penalize you, forfeit it. Okay?
I understand that.
All right.
But thank you.
Thank you, sir. Bye-bye.
What?
Yeah, what were you going to say?
You know,
thought
I
Chris
mean,
was
and
gonna
there's
say
the
something.
option. It's not like if he's making $25,000, they're not going to say, "Oh, well, gee, you owe us $5,000 right now."
Right.
That's one of the options.
Right,
You
what
could
they
just
do is they adjust. What they do is if you go over, then next year, until that penalty is paid up, that forfeiture is paid up, they
right.
take it out of your
right.
future
They could
benefits.
take full payments. They could
Right.
take partial payments over. So they work with you, so you're not in jeopardy.
Right. I mean, there are some people that are making $17,000. Well,
Yep.
the repayment is only going to be on $500. So it's very individual, but a lot of people fit into this under 15,720 thing. Okay, let's go back to the phones. We're going to talk to Mark. Hey, Mark, how can we help you?
Hi, I got a question about the gambling and Social Security.
Yeah, Mark.
You're always talking about it's bad to win.
No. But what happens is
You spend a lot to win.
what happens is on line 21, your gambling winnings are listed on 21,
Yeah.
which makes your Social Security go up, even though you didn't get more money. So look if you're going to go hit the Preakness and win $100,000, God bless you.
Quick question.
Yeah.
If you win $1,000, are you going to pay more than the $1,000 that you won at any point?
Well, you're going to pay tax on the $1,000,
Correct.
and then it could make more of your Social Security taxable by $1,000. So you're going to pay tax on $2,000 if you're in the 15% bracket.
Are you going to pay more than you won?
No, never.
So it's a good thing.
It's a good thing, but but what happens most of the time, Mark, is that the people lose.
Spend a lot.
So they really lose, and so they're on line 21. It makes their Social Security go up, but they lost the money. So in that situation, it's bad.
All right, but you're never going to pay more than you won.
Correct.
No, you aren't, but you are going to pay more than you lost. In other words, let's just say that you had somebody that had $10,000 in a pension and $30,000 in Social Security, $1,500,000 of it would be go into the computation. Put you at 25. Single person wouldn't pay taxes. But then they go to the casino, and they hit a jackpot. So now they have their $10,000 in pension, a $20,000 jackpot, and now their Social Security computation again is at 15. goes up to 45,000. With their $25,000 floor, they now have 10,000 of the Social Security going to be taxable. So they're going to have the 20,000, the 10,000, and the 10,000. So now they're going to pay taxes on $40,000 AGI, and they're going to reduce that by their personal exemption and personal and standard deduction. So they're going to end up paying $3,000 in taxes when they never won anything.
Correct. All right. When they never, but if you did win.
If you, Mark,
But
if you win,
how many
that's good. Most people
put
lose.
it right back in?
Lose.
Most people, we see all the time, I won $3,000. How much did you lose? $6,000.
And not
Most
talking
people
about losing, I'm itemizing or any of that.
No, I mean, strictly, obviously, Mark, anytime, and this is the big rule, anytime you can make money, make money.
Win a car.
They're never going to take money from you that you didn't, you're never going to pay more than you make. Never.
So it's a good thing.
It's a good thing. But most people are losing money because they're not as good at gambling as you are.
But if you win, they're not going to
That's-
take more than you want.
Not at all. You're absolutely correct.
Oh, okay. Thank you, dear.
All right, thank you.
Hey, I'm sorry. I wanted to share something that you taught me, Esther.
What was that?
You know how that caller, Dave, called and he said if he makes over $15,720 and he's not over at full retirement age. One time I had a client in my office, and they said, what if I bulk up my pension and I max it out and put $25,000, and so would that reduce my income so I wouldn't have to worry about it? And the truth is, you taught me no, that's not the case. You can't do that.
No, that's correct.
Yeah,
that's
yeah.
exactly right. Because they do it on the FICA wages,
Right, they do it
not
on the
line
FICA.
one.
So I wanted to share that.
That's correct. All right, next week we got for those of you that want to.
What I was going to say. Talk about planning.
Yeah.
I was going to say, we all talk about planning. This is planning Social Security. Next week, we have one of the things people don't like to talk about, and that's estate planning.
I like to talk about it. I keep. Somebody said, "What do you got, a fetish with dying?" No, but I know it's coming. And
Right.
so estate planning is so important, and we have a wonderful guest,
Jeff Katz
Right.
from Katz and Bear, and he's an amazing person. He works with you. He'll put it in terms you can understand,
Yep.
and that's what's important.
So all week long, call Aunt Susie, Uncle Lou, whoever would be interested in a great free legal advice from a great estate attorney who will help you to plan for your estate. Is Jeffrey Katz. He's going to be our special guest next week. So save up all your questions. Anything else we want people to know about this?
If you filed amended returns and you're still getting bills from the original return, have patience. The IRS has many different computer systems, and they don't talk to each other. So don't pay that bill.
Sounds stupid. How can that be?
Another thing is injured spouse. This year, what have you been noticing about injured spouse returns?
It's taking forever.
Oh, we've gotten so many calls. It's like 2 months longer than it usually takes if you file an injured
and
spouse.
by the way, the IRS has just let everybody know that if you've gotten an earned income credit next year, you will not get your refund until after February the 15th. They just ruled on it, and that's what I always tell people: don't send your money into the IRS to get a refund, because I'm going to tell you, folks, they're holding those refunds longer and longer and longer. Until next week, I'm Esther Gulius, the tax lady with Chris Fabian, Tiffany Fabian. Happy Father's Day. God bless you guys. Bye-bye.